Hey guys, in today's video, we're talking about 5 stocks that I bought this past week. And I've got one stock in particular that I'm going to focus on, why I'm buying this stock, and I bought 2 shares of this company and spent about 50% of my budget this week on this stock. We'll be walking through some of the key facts. Before we get started, don't forget your $50 if you sign up for Wealthsimple Trade today. If you've been watching my videos and haven't yet taken the plunge into investing, well, Wealthsimple Trade is the easiest, cheapest, and freest way to start investing today. On top of that, if you sign up for the Wealthsimple Cash platform, it's basically the Cash App or Venmo of Canada, you can get a free $10. All right, let's head over to my computer and let's talk about the 5 stocks that I bought this past week. So starting on September 8th, I made a deposit of $200. The first buy this week was some shares of Shopify, or partial shares. I ended up buying 0.01319 of a share, and the price per share I paid was $1,882.94. The next day I bought 1 share of Power Corp Canada for $43.01 because that's still way under the net asset value of around $51. So I personally think Power Corp Canada is still undervalued, and I'm still averaging up on that because of that reason. On September 9th, I bought 1 share of Air Canada. I paid $23.78. On that very same day, I bought 1 share of Dollarama for $56.50. To close out the week, I bought 20 shares of DCM for 99 cents each. And speaking of buying shares under $1, I again bought another share of Dollarama on the Friday. I paid $55.49. And as you can see, closing on Friday, Dollarama stock closed down at $55.41. Now, if you can guess which stock I'm talking about this week, then kudos to you. But before we get into that, let's talk about my portfolio metrics. So here you can see the total market value of my portfolio is $7,372.94. I'm up about 4.66% or $328.36. Currently, this is the 26th week of my portfolio, so over 26 weeks, about half a year, I'm up around 4.66%, so not too bad, roughly on target for a 7% increase per year. Now, sorting my portfolio based on current market value, my top shares are TD, Power Corp Canada, Kinaxis, Air Canada, and the Bitcoin ETF. For the most part, a lot of my positions are in the green. However, there's some positions that are in the red, and some are in pretty deep red. Here, for example, Good Nature Products is down by about 25%. And DCM, or Data Communications Management Corp, which I bought this week, is down by about 16.68%. This is nothing really to those who have been watching my portfolio regularly. As you know, these 2 positions, they're slightly higher risk companies, and they've been down in my portfolio for the past 5 to 10 weeks. However, I do have a long-term thesis for these, and I'm holding them for at least 3 years, if not more than that. The other company that got hit fairly hard in my portfolio is Air Canada. And that's just with the whole Delta variant. People are a bit more hesitant to travel, I think. And investors are also thinking the same thing. With this 4th wave coming, who knows? We could have more travel restrictions ahead, and people are hedging their bets and selling off Air Canada. However, as Air Canada has been selling off, I've also been buying slowly, as you can see from this week. Now, jumping over to the stock that I'm talking about today, and that stock is Dollarama. So we're here on the website, and honestly, I've never been on the website before just because I don't shop at Dollarama. But what's interesting to me is that you can actually shop online now. You can go buy school supplies, you can add them to your cart, and you can check out. There's a $9.99 flat fee shipping or Penguin pickup. Not really sure what that is exactly. So it looks like they're not able to offer free shipping like Amazon, but for a dollar store, you kind of expect that. It really doesn't make sense for them to be able to ship products that are from $1 to $4 completely for free. And one point that I want to make here is that Dollarama is not really threatened by Amazon. Because if you think about Amazon, if they're going to be shipping products that are worth $1 or $4 or less than that, then they're going to be losing a lot of money. So for Dollarama, they have a pretty solid business model that is not going to be threatened by Amazon, at least not in the near term. If Amazon starts shipping with drones or maybe with autonomous vehicles, then it's possible that they could compete with Dollarama. However, still in my opinion, fairly unlikely. It's very hard to sell low value goods and offer shipping at the same time, unless people buy in bulk, where they're buying like $50 or $100 worth of goods each time. But people dropping into Dollarama, these are lower income people typically, somewhere around the $20,000 to $30,000 income range, and they're maybe spending $10 at a time. So there's no way Amazon can really compete with that unless they start opening up physical stores. Now, going over to their investor presentation, I've got a few things that I want to highlight here so that you don't have to go through all 37 pages. First thing, we can see the thousands of people per Dollarama store. Currently, there's about 37,000 people for Dollarama store in the western provinces, and then 27,000 people per Dollarama store in Ontario, and 22,000 people per Dollarama store in Quebec. If we compare that to the States, right now we've got double the amount of people per Dollarama store. So I think there's still a lot more room for Dollarama to grow within Canada. And we can also see that the western provinces are a bit more untapped versus eastern Canada. Here's a breakdown of all the stores within Canada right now by province, as well as they laid out a 3-year growth of their stores versus their competitors within Canada. So right now, Dollar Tree Canada is the closest competitor to Dollarama within Canada. And they're about 1/5 of the size of Dollarama, and their number of stores are declining year over year. The next closest competitor, or the third competitor, is Dollar Store with More, which I've honestly never heard of. And again, their stores are on the decline. Same thing with Great Canadian and Buck or Two. So Dollarama basically has a monopoly on dollar stores within Canada. And their long-term plan by 2031 is to open up a total of 2,000 stores within Canada. Compare that currently with their 1,381 stores. And just note, this is 2020 here, 1,314. During the pandemic, they continued to open stores, as well as in the second year of the pandemic, they're still opening stores. Dollarama is not just a Canadian pure play on dollar stores. They also have a presence in Latin America. This is with their acquisition of 50.1% of Dollar City in 2019. And they're targeting to open up a total of 600 stores in the initial 3 countries that they're in Latin America, by 2029. They just entered Peru in May 2021. The question that you might have running through your mind is, how are dollar stores succeeding in today's day and age? We can see that their closest 4 competitors are on the decline, but Dollarama is on the incline. Well, one of the greatest secrets of Dollarama is their direct sourcing expertise. They have a long-standing relationship with low-cost supplier networks. So a lot of their products, you'll notice, are made in China. And instead of going through an intermediary person to buy products from the factory, they have direct relations with the factory. As well as they've worked out their shipping and logistics where they have very low shipping rates compared to other people. And the way that they can do this is honestly because they're growing the number of stores that they have. And as well as they have a significant number of stores. So they do have fairly good leverage over the suppliers because they have so many stores. So think of, if they're ordering one product like a pack of balloons, they have to order those pack of balloons for a single store times about 1,300. So maybe they order about 100 packs of balloons for one store, but then multiply that by over 1,000 stores, then you've got a very large order of balloons. And if a supplier wants to win Dollarama's business, then they're going to have to give them an attractive price per unit in order for Dollarama to go to them, because a lot of suppliers will want to bid on that Dollarama contract. And because Dollarama makes such large purchases, another advantage that they have over their suppliers is that if the suppliers screw up the quality, then Dollarama can threaten to go to another supplier. So if you're a supplier for Dollarama, you want to make sure your products are top quality to ensure that Dollarama doesn't leave you and go for someone else, because they bring in a large chunk of revenue. And if Dollarama is making such large orders, they can also have customized products where they can brand it themselves, have different packaging, and to make it look like their own product or in-house brand. So these are the reasons why I'm still buying into Dollarama stock on my portfolio, and right now Dollarama sits at position number 7. The total value of Dollarama is around $498.69. If we go over to Dollarama stock over the past 5 years, in 2018, the stock was trading for about $56.43. So I'm basically paying the exact same price as someone did back in 2018 at the peak. So I personally think, looking at the entire growth story chart of Dollarama, they haven't really moved anywhere in the past 3 years. However, if you look at their stores over here, they've increased their number of stores in the past 3 years by about 130 stores. And they're trying to aim to get to about 2,000 stores. So that's about a 50% increase of the number of stores in about 10 years from now. Dollarama trades at a P/E ratio of $29.23. It's no tech company. However, they are a profitable company, and they pay a small dividend of 0.36%, which continues to grow year over year. Market cap of $16.88 billion, and I think that this could probably grow to about a $30 or $40 billion company by the time we hit the year 2030. Lastly, I want to talk about some of the risks, because you should know these when investing in the company. And one of them is ESG. ESG stands for environmental, social, and governance. So the reason why I see ESG as a risk right now is mainly because of climate change. A lot of Dollarama products are one-time use or super cheap, they break, and then they end up in the landfill. And this might be one of the reasons why investors stay away from Dollarama, because they don't want to support this whole culture of buying and throwing away stuff and increasing the number of products or things in our landfills. So that might be one of the risks going forwards with Dollarama, where the government might try to get more involved in preventing these cheaper products that get thrown out or one-time use products. Things like plastic straws or even balloons in the future could end up having a heavier tax from the government so that they discourage people from buying these one-time use products that get thrown out in the landfill. So this is one of the major risks that I see going forwards as climate change becomes a huge thing on people's minds if it's not already. So Dollarama needs to make sure that they stay on top of their ESG, maybe finding a way to make their products out of renewables or having their products be easily recyclable or even plant-based plastics or something like that, which will decompose in a couple of years or so. I'd love to hear your comments on Dollarama and if this is a stock that you're interested in buying. If you're interested in the spreadsheet, I've got a course down below that teaches you to make a similar spreadsheet. Not exactly the same, but if you want this spreadsheet, it's available to all Patreon members. If you're interested in how I construct a simple beginner's portfolio, check this video right over here.